Well, for now, the market is under pressure, down almost 126 odd points. But the AMFI data, the mutual fund data has come through, and the assets under management has crossed 50 lakh crores on December 31st for the first time ever. More of the mutual fund data will come through on your screen, and that's the SIP contribution, by the way, slightly lower than what we saw in the month of November, so 17,600 crores, but much higher than what we saw in the preceding month. So more on that in a bit. We have G. Pradeep Kumar, who's the Chief Executive Officer of Union Mutual Fund, who joins us now to assess this data for us. If you look at it on a month-on-month basis, it's pretty much similar to what we saw last month, Pradeep Kumar. But what has your own assessment been? The numbers are still trickling in. The small cap fund inflow seems to be stable compared to what we saw last month and overall as well. But your early assessment of the situation?
First of all, I think it's a big landmark for the industry to cross the AUM of 50 lakh crores. I think that's a big thing for the mutual fund industry and for the Indian market as a whole. So that's the biggest highlight from the data. But if you look at the flows, I think the flows on the equity side, net flows is significantly better than what it was last month. If I look at the data, I think it was about 15,500 crores last month, and it's close to 17,000 crores this month. So that's a significant improvement. And SIPs have continued to be pretty robust. Right. So I think the faith of investors in mutual funds as one of their primary tools for investment, I think that remains very strong. The underlying trend is very strong. And I think it's a reflection of the faith and the confidence that particularly retail investors have in the equity markets as well as in mutual funds.
That's incredible. 4 straight months of $2 billion worth SIPs coming in. October, November, December. November and December were particularly good for the equity markets as well. All of last year was great for the small and mid caps. So all these portfolios were felt really good. And the good part is, through thick and thin, the Indian investor is continuously wanting to build their wealth and be partaking in this wealth creation journey itself. I wanted your thoughts on debt funds in particular, largely because now that interest rates are near peak, some of them, and as the risk in the equity market increases as it moves higher, some of the people would look at it as intuitive to perhaps diversify some of their equity asset base into debt funds as well, as going forward interest rates are expected to decline. Your thoughts on how this data should be looked at?
Yeah, certainly. Just one more point before I get into debt funds. The flows into small cap remains very robust. In fact, it's going up. So obviously, small caps are not cheap, and they had a great run in the last few months. So we would, really caution investors to stagger their investment in small caps, because from a valuation perspective, they are not cheap, and large caps are appearing to be more reasonable. Now, so some kind of rebalancing would make sense. On the debt side, 2 things stand out. One is that the short-term debt funds, including liquid, overnight, etc., have faced net redemption. I think the primary reason has been the relatively tight liquidity that has been prevailing in the market for the last few weeks. So that has led to outflows, and especially in the context of advance tax payments and the normal redemptions that happen towards the end of the quarter, etc., have led to short-term debt funds facing outflows. However, it's our belief that the longer-term debt funds, the bond funds, the GSEC funds, etc., make sense at this stage, because the yield levels are fairly attractive, and there is a very good chance that over the next 2 to 3 years, the interest rate cycle would reverse significantly, in which case the investors stand to make good gains from the mark-to-market side as well. So at current yield levels, plus the possibility of getting mark-to-market gains when the interest rates start coming down, I think the duration funds, the long-term bond funds, yield funds, etc., really offer a very good opportunity for investors who want to rebalance their portfolios.
Okay, in fact, the small cap, the data of the money continues to get quite big. Actually, monthly inflows have almost hit about 4,000 crores, 3,857 crores, as you were mentioning. Just look at that. I mean, it's been a bit volatile, but last 2 months have really been good for the small cap flows. We have Harshvardhan Roongta of Roongta Securities, who also joins into the discussion. Harsh, the AUMs have crossed 50 lakh crores, so big milestone for the for the mutual fund industry. But as our previous guest was pointing out, maybe some amount of caution is required now because valuations are also become very expensive, especially in the small cap space. Would you exercise that caution as well? And what is your understanding of the numbers that have come through?
Well, Sonia, with regards to the assets under management going up to 50 lakh crores and above, I think we are still below the mark that we would expect retail investors to get into equities or mutual funds for that matter. So I think there's a lot of scope with regards to the AUM going up. Now, your concern being with small caps particularly, yes, we voice our concern unanimously on the fact that the valuations in the small cap category have been elevated. There is a need to actually rebalance or realign the portfolio. So I've been saying this earlier as well, that in the last 1 to 2 years, many new investors have come into the mutual fund fold purely looking at past returns. So if somebody new comes into the market, looks at the past returns and feels that small caps have given a return of say about 45 to 55%, and that is the kind of returns I'm going to expect in the future as well, there is where people will go wrong. So avoiding mutual funds completely, I don't think that's a choice. You need to realign between large caps, mid caps, small caps, between equity and debt. You need to do that rebalancing. But if you're looking at past returns and expecting the same to continue into 2024, then I think you'll be highly disappointed. And these are the investors who will completely exit the equity markets or mutual fund for that matter. So I think there needs to be some recalibration in terms of your portfolio allocation, but not in the allocation on the mutual fund side.
Right. What's interesting is that the investors are a lot smarter than we give them credit for. One, they've stuck through their investment plans through thick and thin. Secondly, we are talking about valuation attractiveness in large cap funds out there. We've seen around 300 crores worth inflows. We're talking about some sort of overstretched numbers in the mid cap and the small cap end of things. The mid cap, inflows have halved from the month of November. And at the same time, we've seen small caps as well. From the peak of around 4,000, 5,000 crores, they've come down to around 3,800 crores itself. And as Pradeep was saying, it would be prudent now to allocate some amount to debt as well. And we are suddenly seeing almost 2,000 crore increase month on month in the hybrid funds too. So the hybrid funds data that we have from November is 13,500 crores, and that amount has increased to 15,000 crores in December itself. 50 lakh crore in the month of December. Harsh, let me ask you, what's your prognosis for 2024? The rate at which it is growing, where do we end this year at?
Mangalam, it's anybody's guess for that matter. I would hope that this number doubles because eventually investors would need assets, or rather avenues where it can be professionally managed. So mutual funds being that avenue where you could park your money even in debt, hybrid, equities, anything, you have professional fund managers doing it. So it's about time that investors understand and hand over the money to professionals to manage. In practical sense, I think this number could go up by about 25 to 50% this year, given the awareness that investors have had with regards to the kind of returns or with regards to professionalism in which the money can be managed by mutual funds, and also given the fact that all kind of assets, from the lowest risk to the highest risk, paradigm, investors have the choice to pick anything which they like. So I think it's a very, very good tool to park your money. It's liquid, it's transparent, very well regulated. So I think it's an avenue that is a must for every Indian to invest their money, even NRIs for that matter. So every investor would need to have some allocations for mutual.
Okay, I just want one view from Pradeep Kumar on the surge that we've seen in hybrid funds, and I would like to pull that chart up as well. I think 3 months ago, the money into hybrid funds was about 9,000 crores, and now it's gone up all the way to 15,000 crores. Is there anything unusual you notice here? Some renewed interest in hybrid funds? If yes, is that a trend that you observe?
I think that's a very interesting observation. If you look at the data of hybrid funds more closely, you'll realize that the segment that is gaining a lot of traction is arbitrage funds. So arbitrage funds, the yields have been going up. And if you look at it, they are yielding, some of the funds are yielding, close to 8% kind of returns. So people who want to park funds for the short term or even up to a year or just over that, they would find that arbitrage funds are a very tax efficient option at current yield levels compared to pure debt funds, because you get the equity taxation and you get fairly good yields, spreads at current levels. So I think the standout data on the hybrid side is actually from the arbitrage funds.
Okay, all right, gentlemen, thanks a lot for joining in. I appreciate your thoughts here and reacting to this data. So, big milestones in the mutual fund industry, 50 lakh crore AUM for the first time ever. And of course, miles to go before they sleep, as they say. But good data coming through, especially a big surge seen in, some categories like hybrid funds. Let's do one thing. Let's take a quick break. The market is a little subdued today. Dharmesh Shah of ICICI Direct will be joining in with some trading strategies on the other side. Stay tuned.